one of the surprise performers, I think, year to date in Europe has been the retail sector, which has benefited from the obviously online path to the consumer, but this gradual rebound and reopening that we've seen across Europe. As we see this second round of lockdowns now, is it likely that we're going to lose the gains that we've seen in some of these consumer-sensitive areas?
Hi, this is Cedric, and thank you very much for having me on the show today. No, I think really at the moment the key questions that are on investors' mind, I think there are mainly three. You have one. After the very strong mechanical rebound that we saw from government reopening economies, growth seems to be slowing on a sequential basis. So the question here is how much room for further gain in activity remain after the catch-up phase. The second question is, of course, that of the pandemic and that of the management of the second wave in Europe and economic costs associated with it. And the third question is that of the fiscal support and monetary policy support that's being extended. I mean, these are the three pillars at the moment that I think investors should consider. This is why, for the last 3 months or so, the Euro stocks market, the European equity market on the Euro stocks has been basically trading on a very narrow range between 345 and 370. And I think, what's needed for a broadening of the performance from this consumer retail online stocks in the European market is more clarity on these three questions that we don't have at the moment.
We have seen markets in Europe respond very positively to indications of further liquidity from not only the ECB but through the pandemic fund. As I read Reuters overnight, they now suggest that there is a big row going on within the board of the ECB about the direction of further stimulus at this stage. Does that remove one of the underpinnings, do you think, of support for European stocks at the moment, given what you've said about your three questions?
No, clearly, I don't think so, because I do think that investors are quite skeptical on this report based on anonymous sources taking on actually named member of the ECB, such as Fabio Panetta or Philippe Lane at the moment. And if you look at the, we actually have had this row between the hawks and the doves over the last 2 years or so, and this became very evident at the end of Mario Draghi's mandate. But, the track record has been in favor of the doves, which have always managed to impose most of their view and move the ECB into greater stimulus here. So frankly, I don't think at the moment anyone serious is considering removing stimulus at the ECB. And actually, I think that if what the sort of rumors we hear are actually that there is a debate on stimulus at the ECB, that's very positive, because it means that the board and monetary policy council at the ECB is now taking act on the fact that the recovery is slowing and looking to add a further stimulus, which is positive for markets.
Cedric, since the very beginning, we were told that we're going to have to learn to live with this virus, that vaccines, if they came into the mix, would take a long time to develop. So if we look at the learning to live with the virus elements, it seems a little bit disappointing. We've been waiting for this contact tracing app to be rolled across the UK and other jurisdictions. There's been problems with them when it comes to COVID tests that have not been easy to roll out as well in terms of giving people the results. Just give us a sense of what we should be hoping for from governments in this second wave.
Yeah, I think this is actually the key question for investors at the moment, because they are pondering the balance between the management of the second wave and the economic burden on activity that will be associated with it. And here, clearly, the rise in the number of daily tests that are coming back positive is concerning. It's going up rapidly in several countries. For Europe on aggregate, we've basically seen the daily number of positive tests going up from 10 per million as of early July. Now it's around 90 per million. So that's quite a rapid increase and concerning. But what I've been telling my clients is that actually, this is somewhat misleading, because this hides the fact that policymakers at the moment have much more margin for maneuver on the economic and pandemic front than they had in March. And I think they are using it.